Warning, the following program was produced for traditional broadcast television. Over 12 minutes of commercials have been removed, but interruptions are still included. Thank you for watching.
When you feel sick to your stomach, like when everyone's telling you you're an idiot, that's when you do the best. Because if everybody's telling you how smart you are, it's already in the price.
People are continually debating about the cyclical nature of Bitcoin, and I was in the camp of, you know what, I really don't think this time is that much different.
4-year cycle's over, institutions are here, and I'm scratching my head last year going, well guys, humans are gonna human. I struggle with this whole fear of, the Terminator stuff.
If we're gonna be witnessing this quote-unquote job apocalypse, then we need to have assets, especially Bitcoin.
Government officials insist we will continue to keep you informed as this story unfolds.
Welcome to the Money Block with Matthew J. Moore, the Bitcoin-focused program that's waking the masses to the fiat money Ponzi scheme. Money is changing, and your freedom is at stake. So stick around and learn how to empower yourself for this new digital age. Now, here's your host, Matthew J. Moore.
And welcome, America. Welcome, world. Man, you are here at the right time. Right place. That's right. We are on BizTV, coast to coast. And man, if you are a Bitcoin lover, a newbie, maybe you consider yourself an expert, I just want to welcome you because today's program, oh man, it's going to be jam-packed with some items that people like to debate about in the space. But here on the Money Block, we bring the right guests all the time, and today's no exception. In fact, today's guest, he's a returning guest on this new format. His name is Mark Yusko, CEO and Chief Investment Officer of Morgan Creek Capital. Mark, it is so good to have you back on the program here. The reason why I want to just dive into this is because we got a lot of stuff to cut our teeth on today. But people are debating or continually debating about the cyclical nature of Bitcoin. And I was in the camp of, you know what, I really don't think this time is that much different. And so it seems that is the case. And it seems that you have some opinions on that. But I definitely look forward to also diving into this whole idea of AI converging, meeting Bitcoin. But Mark, what's got you the most excited about what's going on in the markets right now? Because before we dive into the meat of it, I just want to get your perspective on what you're watching right now.
Well, we're watching everything, right? I mean, it is a wild and amazing time. We got confluences on the plus side in terms of technological innovation and adoption. On the minus side, we've got global conflict and supply chain problems again. So there's a lot to watch. And part of the challenge of investing is balancing between opportunity and risk. I mean, not saying anything that anybody doesn't know. But I always say that investing is all about making sins of commission as opposed to sins of omission, right? You want to take risks. That's what we do. If you take no risk, you make no return. That's why they call it the risk-free rate. But the risks you take, you should be compensated for appropriately. And I think one of the challenges of markets right now is many of the assets, you're just not being appropriately compensated. Private credit is the latest thing to kind of show signs of blowing up. And some of the big tech valuations have stalled out here. Even Bitcoin, which we love to talk about as a diversifier of portfolios, as a long-term wealth generator, has struggled really since October. And back to your first point, people said, well, 4-year cycle's over, institutions are here, it's up only to the right. And I'm scratching my head last year going, well, guys, humans are going to human. and humans are what make markets. And the reason the 311, I call it 311, so it's 3 years, 11 months. It's actually not 4 years because it's based on the number of blocks, the actual literal blocks in the blockchain, not a calendar year. And long story short, what that means is every 3 years and 11 months-ish, every 40,000 blocks, you get a halving.
Well, when we come back, I want you to go into that because we have a lot to cover, like I said, about this cyclical nature. And is the job apocalypse here with AI? We got a lot to cover, but when we come back, we're going to talk to Mark. So stay tuned. This is The Money Blog. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, ladies and gentlemen. It is segment 2, round 2 of the Money Block. Yeah, I know that first one comes fast, but man, this episode is going to be jam-packed with some great content. So if you are new to the Bitcoin space, maybe you're unfamiliar with the cyclical nature of the overall cryptocurrency space, well, this is the episode for you. We're going to be talking to the guy who knows a lot, who's been in the space for a long time, who knows a thing or two about investing, and his name is Mark Yusko. He's the CEO and Chief Investment Officer over there at Morgan Creek Capital. He's a returning guest, and every time we have Mark on, he always gives some very enlightening perspectives. One of my favorite quotes. I don't know if he came up with it, but humans are gonna human. So that's one of my favorites. But before we continue this conversation, I just want to let you guys know that if you're watching from television, maybe you're watching online, because we are online as well. But if you're online watching this, be sure to give us a like, a share, subscribe, comment. Let Mark know what you think about his thoughts on this market dynamics. And then also, if you are kind of new to this idea of sound money, the principles and concepts that make Bitcoin a reality, things that may help you going into the future as we move into this highly digital world, I recommend you download my new book, Foundations for Liberty. There's a QR code that you're going to see right over there. Get out your phone, scan that. It's my way of saying, hey, thanks for watching. Thanks for tuning in. It's a gift. So enjoy that. And, I'm going to pick it up back here. Mark, before we went to break, we were just talking about things that you're watching, things that maybe you're excited about in the marketplace. But let's dive into some of the, I'm not going to pitch you against another analyst, but, Lynn Alden is a very well-known name in the space. And she had some comments and some perspectives on the Bitcoin halving, basically saying that the Bitcoin halving is basically having less impact now that there is, as far as the whole supply and demand concepts with Bitcoin and how much is minted every 4 years or every 3.11. So I want to get your perspective on here. Is she wrong? Is she right? Is it both? What's your take on this 4-year cyclical nature of Bitcoin that you've kind of analyzed?
Look, there are a lot of very, very smart people, Matthew, that dismissed the cycle and said, we were going to go up only, and the cycle wasn't going to enter in. But the reality is, when you cut the block rewards, what a halving is the rewards that are paid to the miners, right? The people who contribute their computing power to secure the network. When you cut that in half, think about it. In theory, half of the miners would go out of business, right? Because their costs are fixed, their electricity costs, their computer costs. Now people say, but you can adjust the difficulty of the algorithms. Sure. But the reality is, what tends to happen is the price adjusts higher to reward the miners for staying in the game. And that triggers movement. And movement attracts attention, and that attention attracts different types of market participants. So at the end of the day, the reason I say humans are going to human, and the reason that I think the cycle will exist forever, is when the price is below fair value, right? investors, people like me and you and others, hopefully listening to the show, buy, right? That's what you're supposed to do. You're supposed to buy assets for less than their value. If you can buy $1 for 80 cents, that's great. But then as the price starts to move towards fair value, what happens is the traders get involved. They don't really care about fair value. They want movement. So the traders get involved. And trading's not bad. It's hard to do, but not bad. But then as the price reaches fair value and gets a little bit above, the hedgers, the miners, the oil producers, you're from the oil producing region. A hedger owns assets. They need to sell it forward in the futures market. A speculator needs to come in on the other side of that hedge. And so prices go up a little bit more as the hedgers, cover. Well, then what happens, unfortunately, is the gamblers come in. And the gamblers come in and they push prices far above fair value. And that's what triggers the cycle. And so last October in Bitcoin, the gamblers came in, they put on big leverage. We got to about 1.5 times fair value. And now we didn't get as crazy as the past cycle in 21 or 17. And so the dip didn't need to be as big, but you needed to dip. So now we're back below fair value. So investors like me are accumulating again. So it's that life cycle of speculation and investment activity. So it's not necessarily a combination of the business cycle, liquidity cycles that people are talking about, or the rewards through the Bitcoin halving. You're saying it's just human nature. It is, and all those other things matter, right? The business cycle and the liquidity cycle certainly matter. And if there's excessive liquidity, that allows people to speculate or gamble even more. Now, the fact that they didn't cut rates towards the end of the year, beginning of this year, people couldn't get as much leverage. So we didn't get as high above fair value as we probably could have. So liquidity does matter. Business cycle does matter. But look, we've been without a recession. Well, unless you're in the bottom half, like we'll argue the K-shaped economy, the people at the top, they're not in recession. The people struggling to get by, they might argue we're in a recession. In fact, there's a lot of data that would say we are. But all of those things matter, but Bitcoin is different in the sense that the halving is hard-coded in the system. And so that triggers these emotional human responses. And that doesn't mean that the cycle's not going to get damped down, that volatility is not going to compress as more people own it. Of course that's going to happen. Because remember what volatility is, Matthew. Volatility is not an evil thing. It's not a negative. It is simply disagreement over a future state. That's all it is, right? Some people think Bitcoin's going to the moon. Some people think it's going to zero. With treasuries, right, if you buy a T-bill, everyone agrees that in 91 days you get paid 99% of the time. So there's no volatility. Right. Well, and what's interesting, as somebody who's been in the space since 2017, watching these bull and bear market cycles, it's been a pattern that I've noticed, and maybe you have talked about this before, but the bull market technically topped in October. Prior to that, November. Prior to that, it was December. So it's like, are people just anticipating, okay, this is where it should be, so I'm going to front run this and try to sell over here? Does that have anything? Sure, but it's really more simple than that. Okay. Like literally the halving occurs a month earlier every 4 years because it's based on the number of blocks, not the number of days, not the number of months. And so when that block occurs, right, the halving occurs, and the human nature, takes over. And so as the price comes from, the depths of winter, far below fair value, and starts getting back to spring, into summer, and then into fall. And fall, it accelerates through that gambling cycle. And then you get to the peak. And that peak isn't necessarily determined definitively by anyone. It's just, again, human nature. Somebody says, yeah, that's too high. Now, historically, there's also been linkages to things like the Chicago Mercantile Exchange and futures contracts. Commodities can be impacted, are impacted by futures contracts, different than securities. And it's a whole conversation for another day. But at the end of the day, Bitcoin is a commodity, Ethereum's a commodity, oil's a commodity, corn is a commodity, gold is a commodity. And we've all heard the stories of prices being manipulated in the commodity markets, not forever, but over periods of time, right?
Sure. Yeah, absolutely. And if you guys are watching this show and you're like, man, what's this whole cyclical nature thing all about? And Mark, do you have any resources, anywhere that you could point people if they wanted to go deeper into kind of the things that you've been talking about today?
I mean, there are tons of resources on cycles and, one business cycles, two liquidity cycles. I tend to follow, it's interesting, I follow a guy, his name's Tim Peterson, at N Squared Value on Twitter. And what Tim does is he writes about this 4-year cycle and this fair value phenomenon in Bitcoin. Now, where does fair value come from? Well, it comes from basically a law, Metcalfe's law, which originally applied to media, what we're doing right now. So, in the old days when we were on the radio, right, you would count the number of people that heard a signal. This guy Sarnoff, and Sarnoff's law said the value of the network was how many people could hear the signal.
Sure.
Okay, but Metcalfe came along and said, well, but wait, if a bunch of people hear the signal, they might talk to each other. So there's interconnections beyond just hearing the signal. And so it's not just the number of people, it's actually the square of the number of people. And then Reed came along and said, well, actually, there are subgroups within that network that talk to each other and favor a certain thing. And then I actually came up with an idea.
Well, we gotta run to break real quick. So we're gonna, when we come back, maybe we'll hit on that idea here. But ladies and gentlemen, man, this is gonna be a fun one. We're gonna when we come back, we're also gonna talk about AI. How's that playing into this whole equation, and what's its relation to Bitcoin? So stay put, stay tuned. We've got more with Mark Yusko from Morgan Creek Capital, and tell your friends, tell them to tune in, or like and share this. We'll be right back after this break. We'll see you. Welcome back, ladies and gentlemen. It is round 3, segment 3 of the Money Block, and that's right, we are syndicated coast to coast on BizTV, so thank you for tuning in. And if you're watching online, well, be sure to tell a friend, share, like, comment, let our guests know what you think about today's topic. We're having a fun conversation about the cyclical nature of Bitcoin. We're going to start diving into the AI, just how AI is transforming everything, how Bitcoin might fall into that. And so today we've been talking to Mark Yusko. He's the CEO, Chief Financial Investment Officer of Morgan Creek Capital. And he's always got some fun takes. Love following him on X. But today, before we went to break, we were hitting on just the cyclical nature, like I was saying about Bitcoin. But Mark, you've called AI this kind of grim reaper of software jobs. Is that true? Did you make that statement?
No, I mean, I didn't make the statement, but I've certainly discussed that statement. Every year I do this interesting thing, kind of paying homage to Byron Wien. God rest his soul, great strategist for Morgan Stanley for years, and then ultimately Blackstone. And Byron used to do this thing called the 10 Surprises, and I started doing it about a decade ago. And the great thing about the process is every January, you kind of step away from the world and you kind of gather the consensus on the different assets. And a surprise is not necessarily a prediction, like I'm not trying to, put on my crystal ball hat and or turban like Johnny Carson used to. Older people will get that one.
Might be fun though.
Yeah. But young people won't get that, like Johnny who? A surprise is basically the opposite of consensus that you think has a 50-50, maybe a little higher chance of happening. But if it does, you can really profit from it. And so one of the things is this idea of, the big evil AI. And, I laugh a little bit in that AI is 71 years old.
Sure.
Right? I'm old enough, and some of the listeners and watchers will recognize, 1980, it was the year of AI. Time magazine, cover story, picture of this, rocket ship. That was a long time ago. And then 2000, Intel stock, the previous decade, from 1991 to 2000, was up 20-fold, best performing stock, because their chip was gonna change, it was gonna revolutionize AI.
Right.
Now it's down, it's lower than it was 26 years ago. So AI is not new. It's just, it's really strange, Matthew. It's almost like what they did with prediction markets, right? They've renamed gambling prediction markets, and suddenly it's cool. I'm like, well, the LLMs, right, large language models, they're very interesting tools, but that's all they are. They're not some new thing that was invented. They're not AI. And the real problem is they are artificial kind of creativity, but they're not intelligent. They can't think. They fail all 4 definitions of thought. All they do is pattern recognize, and they're great at finding information. They're better than a search engine, but they're just tools. And so I struggle with this whole kind of fear of the Terminator stuff. And when people talk about AGI being right around the corner, you got Sam Altman and those guys saying, "Oh, we're almost there." I'm like, really? That's kind of like, let's say you invented a robo-hammer and it pounds nails really fast. So on the nail pounding benchmark, it beats humans, right? Pounds nails really fast. Basically what they're saying is, if we get enough robo-pounders out there, suddenly a house is just going to spring up.
Sure.
That's just not going to happen. So all of that said, I spend my time talking about these, the surprises during the year. But where I spend most of my time is, so my point on that surprise was, everyone thought AI was going to be the best and there was going to be all this spending and AI data centers and all this. And I'm like, I'm going to take the under. I'm going to say that innovation is going to happen and we're not going to need all the data centers. We're actually going to have the tools on our phones. And we saw that just a couple weeks ago. Alibaba released a localized Model Quen that you can run on your iPhone. So you don't need a data center. But ultimately, I spend my days in what we call the ABCDs of the digital age. I'm a venture capitalist. I call myself a late in life venture capitalist. So for the last 9 years, I've been a venture capitalist. Before that, I was an allocator of capital to other managers. And we invest in AI, blockchain, chips, and data. And the reason is, and again, everyone from your part of the world will understand, data is the new oil.
Sure.
Right? Larry Ellison said it. It's true. But like oil's sitting under the ground, right? There's some under you where you're sitting right now. It's not really that valuable. It has value, but it's not super valuable. You have to extract it. You got to process it, refine it, distribute it, sell it. Then it becomes super valuable. Same thing with data. Data in a storage data lake, it has some value, but really you need to organize it. That's what blockchains do. You need to process it. That's what computer chips do. And then you need to make decisions with it. That's what AI tools do. They're simply tools, and tools make us better. And so everybody's like, there's gonna be this jobs apocalypse because AI is gonna replace all the jobs. Here's the thing. Every new technology that's come along, every single one in history, people said the same thing.
Yeah.
When the car came along, all the street sweepers were gonna lose their jobs. Yes, we have no street sweepers sweeping up horse poop, but that's a good thing. But today, despite all the job losses of every technology that's come along, there are more jobs today than any time in human history. Mm-hmm. Because what happens is the new technology creates more jobs because the most powerful force in the world is human creativity. Here's a stat that will blow your mind. Our brain, right, runs 24/7, 365, 90 plus, hopefully, years, right? 20 watts, less than one light bulb. And we're talking about building multiple nuclear reactors to power little LLMs. It's a waste.
Sure.
The brain doesn't work that way. The brain is so much more efficient, so much better at all the things that we really don't understand yet that silicon can do. But anyway.
Well, one topic that I want to touch on when we come back from break here is, a lot of people are talking about how, the workers are going to be the ones that are hurt in the future, and it's the asset holders who are going to be the winners at the end of the day. And, a lot of people have been, showcasing, and maybe they're programmed this way, maybe they go out there into the digital wild and figure this out, but these agents are going, hey, Bitcoin is the asset to use. Bitcoin is the tool to use. So I want to, when we come back from break, I want to dive into this concept of, are humans and bots, these agents, are we racing to see who's going to acquire the most Bitcoin? Because we know that maybe Bitcoin is going to be the thing that these bots find valuable as we move into the future. So I'm wondering if you've got some thoughts on that.
100%. 100%.
Okay, perfect. All right, well, guys, we're going to head to break here, but stay tuned, stay put, call a friend, tell them to tune in. And if you're watching online, be sure to share, comment, like, be a part of the conversation. This is the Money Block. We will be right back after this break. Stay put, because we got more with our wonderful guest, Mark. And welcome back, ladies and gentlemen. You have tuned in to the right program, right time, right place. Thank you for watching us, the Money Block. We are syndicated coast to coast on BizTV, and we love bringing some solid content your way when it comes to the digital asset space. Today has been no different. I've been loving our conversation today with our wonderful guest, Mark Yusko. But before I bring him back on, I just want to remind you guys that I'm giving away a free gift. It's my way of saying thank you for tuning in. Thanks for watching. You could spend your time a whole bunch of different ways, and I just am grateful for that. So you're going to see a QR code that's going to pop up right over there. Get out your phone and scan that. That is a free download, a digital download of my Amazon best-selling book, Foundations for Liberty. And in that book, I share the concepts, the principles, the ideas that are going to help you maximize your liberty, your freedom, your pursuit for sovereignty as we go on into this future. And just also, if you're watching online, be sure to share this program. I know Mark's thoughts and comments need to get out there. He needs to. He's making noise already, but let's bring him back on and let's continue the conversation here. Mark, before we went to break, we were talking about Bitcoin and AI. I know during break we kind of touched on it a little bit, but there's a common sentiment that as we progress into the future, the winners are going to be the asset holders and not necessarily the workers. And, you've kind of joked and touched on this whole idea of, the job apocalypse, right? With AI. But it seems that AI is identifying that Bitcoin is a preferred tool to use in the digital age. And if we're going to be stripped from our jobs, if we're going to be witnessing this quote unquote job apocalypse, not that you're saying it, but then we need to have assets, especially Bitcoin, ones that the bots, the agents are going to value and transact in this new digital world. What's your take on this? Do we need to be stacking Bitcoin?
So yes, and look, Bitcoin is the greatest savings technology that's ever been created. It is a better form of money. Look, there's only been one money. Well, that's not true. For the last 5,000 years, there's been one money. Before that, there were other monies. There were shells and there were stone wheels. But for the last 5,000-ish years, it's been gold. And money is an asset that exists in the absence of a liability. Everything else that we think of as money is not. It's credit, it's debt, it's backed by debt. Government, credit, fiat currency. Currency is different than money. Money at the base layer is gold. But gold has a couple flaws. One, it's not very divisible. Like if I had a bar of gold here and I want to split it in half and share it with you, I'm not strong enough to break it in half. So it's just not very divisible. And worse, if I want to stuff it in the computer and send it to you, I can't do that. Whereas with Bitcoin, with a couple taps on my phone, I can send you as small as a few cents or as much as, many, many dollars, because it's ultimately more divisible, more portable, equally scarce, and that it's a better form of money. Okay, well, why doesn't everybody use it? Well, we are migrating to that world. So imagine a future. So you're sitting in the back of your car, and the car drives you. You won't actually drive, it drives you. And it pulls into the charging station, and it doesn't take 40 minutes to charge. It charges in a couple minutes. You won't get out of the car and put a plastic card in the machine. You just won't, right? The car will pay the machine. And then it will pull away, and you'll get on the freeway, and you'll get in the fast lane. It won't take a picture of your license plate and send you a letter in the mail asking you to pay. The car will pay the lane. And then let's say you want to go the fastest way. You can pay Waze Premium to send you on the short route where everyone else goes on the long route. So these microtransactions are going to happen. And whether it's agentic AI tools, like we were talking about, like in the olden days, I used to have to physically go to a travel agent, tell them what I wanted, and they would type into a computer and pull up and give me a physical ticket.
Yeah.
And then there was a tool online, Travelocity, that I could use to make my own ticket. Well, in the future, maybe it's already here, there'll be agents that I say, hey, agent, go book my travel. And that's great, but that's just a tool. But now what does that do? Well, it frees up time for me to do other things and to use, again, that human creativity. And so what will happen as the agents take the mundane, they'll free up time for us to create more new ideas and new jobs and new businesses and more wealth. Because here's the thing, the definition of progress in life is to spend less and less time on survival.
Yep.
I mean, think of the original Sooners. Their life was pretty hard.
Sure.
Right? They had to cure the meat. They had to can the vegetables. They had to chop a lot of firewood, like a lot of firewood. They couldn't go to the grocery store. So life was hard. And the less time you spend on survival, the more time you can spend on creating wealth and doing things to create new innovation. So I'm actually super positive for the future. And yes, mundane jobs, like my son, when he first came out of college, he was an auditor, okay, brutal job. His job was literally sitting at Visa, taking one stack of papers and another stack of papers and ticking and tying by hand. Mm-hmm. I mean, now he quit after 9 months because that's a horrible job. Someone had to do it because they didn't have it automated yet. Now it will be automated, and blockchains will obviate the need for auditing because we won't need to trust the computer systems. Sure. We'll have truth. That's what blockchains do. They provide an independent source of truth. Again, Bitcoin as a better form of money, simple example, old days, I lend you money. I'm super old. I write my papyrus tablet that you owe me $100. You go off to work, come back a year later to pay me $110. I'm a bad guy. I change the 100 to 200. I say, oh, Matthew, you owe me 200. And you're like, no, I only borrowed 100. Nope. The ledger, there was only one ledger, and I'm a bad guy. You trusted me. Bad decision. So the Medicis came along 848 years ago and said, no, Matt, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will make sure the ledgers match. So you go away to do your work to get the 110. I go to the Medici and say, you know what, guys, I'm going to change my number to 200, and I'll give you half. And it turns out some people were corruptible. So you come back, you say, here's your 100. And I say, no, 200. And the Medicis, you say to the Medicis, hey. They're like, oh, Matthew, you must have written the number down wrong. Well, now with Bitcoin, we have a third ledger, not corruptible, immutable, permanent source of truth. So now I lend you 100, you write down 100, I write down 100, and the third ledger, permanent, immutable, which can't be changed, no human interaction, that's a better system. So it's a better form of money. So yes, we should all save in Bitcoin. We may need to spend for now in fiat or stable coins, right? If they, allow that, if the banks allow that. Because see, the banks have had a good run. 848 years, they extract $7 trillion with a T dollars a year globally from us. That would be better if we could keep it, because we don't need their source of trust anymore, because we'll have truth.
Yeah, that's true. So, with the last couple of minutes here on this segment before we go to our next one, the last one, you're essentially saying, if I'm catching your perspective here, is that the job apocalypse that people are worried about, it's not that we're going to lose all these jobs. It's that we're going to have new jobs that are easier, more enjoyable due to the automation.
100%. And some of the jobs, like being a roughneck on an oil rig, it's still probably not going to be an enjoyable job, but it's going to be a necessary job because AI tools can't do that. But there will be lots more creative jobs. Maybe, please, maybe we'll go back to beauty again. Maybe we won't build ugly buildings, and maybe every car won't be black and white and gray. Have you noticed that? Like every car is black, white, gray, or silver. It's just, let's get back to beauty. Let's get to craftsmanship. If we have time, because we're more efficient with our systems, maybe there'll be more artists. Maybe there'll be more creators. And people say, oh no, AI will get rid of all that. No, AI can create what's already been created super fast.
Right.
But it won't create beauty. It won't create new. It won't create innovation. It won't create intuition. And so we're a long way from biologically sound systems in a silicon-based world. Doesn't mean we can't invent something like that. Yeah. But all throughout history, jobs get annihilated by technology, but they actually create more jobs. Here's one stat. 29 years ago, Amazon did not exist. Today, they employ about 3.5 million people.
Yeah. Well, when we come back from break, I want to get your thoughts on your strategies moving forward and what people should be considering, maybe not financial advice, but just what they should be considering as we move into this new age with Bitcoin and AI, because sometimes we got to change things in our life and in our finances. But when we come back from break, we're going to pick Mark's brain and find out what he thinks. So stay put. We'll be right back. This is The Money Block. AI is here, money is changing, but freedom has never been more important. I'm Matthew J. Moore, the Money Block host on BizTV, Amazon bestseller, and Bitcoin policy advisor. Book my up to 60-minute talk, Redefining Wealth and Freedom God's Way. I'll teach your church, business, or civic group how to secure money, freedom, and faith in the digital age. This is urgent, so I'm slashing my fee from $1,000 to $500. Cover my travel, and I'm there. Scan the QR code now. Spots are filling fast. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, ladies and gentlemen. This is The Money Block. Yes, we are syndicated coast to coast on BizTV. I want to thank you for tuning in, taking time to digest the content, the conversation that we're having today. We always talk about things like Bitcoin and digital assets, how that's shaping our world. And today we've kind of been integrating this conversation with AI and how this combo might be changing the way we do things. And, I just want to let you know that it's okay if all this is kind of overwhelming sometimes, because I'm in this space at all times and I feel overwhelmed. So if you are, you can, download download my book. I've got an Amazon best-selling book. It's called Foundations for Liberty. You can scan that QR code that pops up here on the screen, and it'll give you the ideas, tools, and principles around monetary policy, things that might prepare you moving forward as we progress in the coming future. But on the line, I've had our guest, Mark Yusko. He is the CEO, Chief Financial Investment Officer over at Morgan Creek Capital. And Mark, I want to finish off our segment here, or the show here. A lot of people look at their life, they look at their finances, they look at the disruptions that are going on, and sometimes making changes is necessary, and making changes in strategies is necessary. So this is kind of a two-part question that we're going to put together. Have you been changing the way you do things? Maybe you're implementing AI into your practices and your strategies. But also, what should people be thinking about going forward as we move into this new age?
Yeah, Matthew, again, it's the most important question. And look, there's only two states. I'm a biology and chemistry guy. I went to Notre Dame up there, and I studied biology and chemistry. I thought I wanted to be a doctor, and I ended up in the investing world, which I will argue that science training is the best training for investing, because it's all about forming a hypothesis, testing a hypothesis, gathering the data, deciding if the hypothesis is true or false, and then starting over. Scientific process, scientific method. And so in biology, as a biology guy, there are only two states: growth and death. I prefer the former. I don't really like the latter. And so you always have to be growing. You always have to be modifying. You always have to be changing. You always have to be integrating new ideas. And in fact, my pinned tweet on Twitter is the greatest wealth comes from investing in innovation. To do that, you have to invest in something that you believe in before most even understand. You'll be mocked and ridiculed for your non-consensus action, but it's totally worth it. So all of this goes to this idea that we always want to be growing. We always want to be learning. People who watch your show, right? They're doing that. They're seeking new information and new knowledge, and that's the hallmark of greatness, is that lifelong learning and that ability to keep growing. So every day we try to change how we think about it, but at the core, it doesn't change. And what I mean by that is every one of us, right, should have, I think, 3 buckets. We should have a liquidity bucket that funds our lifestyle, 10 to 15% of our assets in very liquid things that pay the bills and fund our lifestyle. Then you got the 10 to 15% in the get rich bucket. And that's to do the wild and crazy, really, the stuff that could be a home run, but it could be a zero. I would say, that's for the brother-in-law's condo deal, the friend's, stock tip. You're going to lose it all, so keep it small. Now, you're not going to lose it all, but many things you're going to lose. But that's okay, because the power law works that the one or two that become big winners, that's how wealth is created, concentration.
Right.
But in the middle, you've got this stay rich bucket. And that stay rich bucket should, if you're young, it should be nearly 100% equity. In fact, I will argue that if you're under kind of 60, it should be against the law to own bonds. Like literally should be against the law.
I don't own any.
And if you're, 60, 70, 80, 90, okay, having some bonds to fund that liquidity, fine. But it still needs to provide more than inflation, because if you don't beat inflation, then you're getting less rich. So you've got to take risk. And there are only 4 risks that you can take. You can take credit risk, right? You can, lend somebody money, buy a bond, or, lend somebody money. And the problem with that is you only make 2% above risk-free, but it is contractual. And if they don't pay you, you can sue. The better risk is equity risk. You make 7% above risk-free. Great deal. And equity doesn't mean stocks. It can be commodity equity or private equity or real estate equity. There's lots of equity. Then you can take illiquidity risk. And the younger you are, the more illiquidity you should have. Private real estate, private equity, private debt, private real estate. All those things give you another 5%. So 12% above risk-free. And then leverage is the final tool. And sometimes that works, sometimes it doesn't. We're all really comfortable leverage on our homes, but we don't leverage our, portfolios.
Sure.
Doesn't really make sense. But ultimately, those 4 ways of making money and how we think about the world. But I will argue investing in innovation as an asset class and constantly looking for the new innovations. As I say, we A, B, C, D, AI, blockchain, chips, data. Those are the things that are going to rule the digital age. So we had the analog age. For hundreds of years, we used pieces of paper, physical pieces of paper, to exchange value. Then we went to the electronic age. We deposited the physical piece of paper in the bank or the brokerage firm, and we traded electronic QSIPs. In the digital age, every stock, every bond, every currency, every commodity, every piece of art, every private business, everything will be a token on a ledger, on a blockchain, and we will own those digital property rights. Today they're called NFTs, non-fungible tokens, but they are digital property rights. And everybody's digital property will then be able to be freely exchanged and invested in a much more efficient, much more cost-effective way. And so it's a long-winded way of saying invest in innovation, focus on the equity part of the curve, focus on illiquidity, and don't be afraid to have a portion of your assets in the things that make you the most uncomfortable. In fact, I will argue, if you make an investment and you feel good about it, you probably do fine. Maybe you make some, maybe you lose some. If you feel really good about it, you're probably going to lose money. If you feel a little uncomfortable, you probably do better than average. When you feel sick to your stomach, like when everyone's telling you you're an idiot, that's when you do the best. Because if everybody's telling you how smart you are, it's already in the price. If everyone's telling you how dumb you are, you're on to something.
Well, unfortunately, we got to cut it short here, but that is some solid advice, good perspective. Mark, thank you so much for joining us again. Ladies and gentlemen, this has been The Money Block. We will see you same time, same place. Adios.
The opinions and suggestions expressed on this program are solely those of the participants and are not necessarily endorsed by program sponsors or any station, media company, or platform broadcasting this program. This program is a product of Moore Media, LLC. The information in this broadcast is not intended as investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Moore Media, LLC, and the company or platform broadcasting this program is not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Moore Media, LLC, and the company or platform broadcasting this program makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk.